Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, January 15th, 2026. It's 4:07 now, so the markets are closed. Let's make sure. Yeah, I have the after hour trade shut off on this chart, so it's going to show as of the close. What I'm going to do, we'll keep it quick. Not a lot happening today. We're pretty much flattish. Looking at like the S&P and the NASDAQ closed slightly positive, so we'll call it a flat day. A little bit of a whipsaw here. I'm going to start out on the 60-minute charts. We pretty much closed the day about where we closed yesterday. So if you recall, we had sell signal 1 recently here, sell signal 2 here, sell signal 3 yesterday. On the break below there, I highlighted the back test yesterday as an objective short entry. We had some wonky little pop back up above the trend line today to put in an ever so slightly but still marginal new high, which was also simply a back test of that trend line. This was our minor, initial minor. We had a little bit bigger trend line. This one's more significant. We closed right back on it. Yesterday, if you look at the daily chart, that same trend line, the way I've had it drawn on the daily right here, it's pretty clean. We had a stick save on the daily yesterday. There's your initial reaction right there, mid-November. Reaction number 2, reaction 3. Don't know if you can see it, but there's a skinny little shadow on the bottom of that candle, the wick that touches. And then we had an intraday drop, banged off that 614 price support. You can see it was resistance, support, resistance. We've traded through it a few times, and it's also that key 50-day moving average, that yellow line. And so that parked us on the daily, and we parked on it again today. So nothing's changed. We still have the divergence. Still maintain those sell signals. Today's pop wasn't enough for a stop. However, on the flip side, as I've continued to reiterate, and I can't press this enough, it's not an all-in yet. We have to get more check marks on the market-leading stocks, the big Mag 8 stocks. I'll go over those real quick. Let's just look at SPY before we move forward. The S&P 500 on that daily also did the same thing. 1, 2, 3, 4 reactions, 5, multiple reactions. Parked about a hair under it, but you know what I say. If you have to squint to see it, give it the benefit of the doubt. So we parked again right on the trend line. This is a wedge that to me looks ripe, ready to pop. And again, if it does, and we can get away from this area here, that this whole line right there is where we broke out the new highs. The S&P will fall back and make that an official failed breakout. And like I said, next stop, with a minor hiccup along the way, maybe at the midpoint will be the bottom of the range if that does play out. So we just need to get a few more market leaders before I move forward. The financials, as I've been saying forever and a day, this is where kind of the tech has handed the baton to the financials. Big tech still down from months ago when they peaked, but the financials have carried the baton up and helped them lift the market to new highs. Not the NASDAQ 100 because this is the sector that it lacks. But it is the second largest in the S&P. That's why you have the disparity between the two. And so this was our previous all-time high in financials. Breakout, backtest again. Failed breakout. Like I said, the redder the better. But it's another day. We've had closed below it. The breakdown happened. It was a pretty solid breakdown. Nice big red candle. That was on Tuesday. We had another red print yesterday. Tried to regain it. You can see the intraday move. That's the skinny part, tells a story. Candlestick has really 4 components in a single candlestick. It shows the high of the day, the highest point on any candle, the low of the day. So those are often the wicks down below. Sometimes the body is a low as well, and then the open and close. And that's what the fat part, the body, shows. And so you can see, again, tried to take it out intraday. Again, nothing big. We're in close enough proximity to say, hey, it could be just a little dip below back test, but that's that. So we need now, which if you're, want to, get a check mark in this sector, you want to see the recent lows taken out right there, the lows from yesterday. So that's what that looks like. Let's do one more sector since I'm in the sectors right now. Let's look at XBI. It's one I've been eyeing. I'm going to call it a trade setup now, not actionable. Just that the market has a voracious bid. It's not going up, as I mentioned, for months now. Might seem like it is to some, but as I just showed you, The NASDAQ 100 is still off its highs. The S&P 500 is pulled back off the high, and it's trading now where it was months ago. So we were in a go nowhere market. Again, it's sector rotation. I've already spoke on that ad nauseum. You can be glass half full, glass empty about it. To me, it seems more like that terminal lucidity I talked about recently. We'll see. Time will tell. But this one I'm watching. And so what you've had here is a minor trend line break. This is XBI. I'm sorry, guys, if I didn't mention biotechs, the S&P Biotech ETF. There's our primary uptrend line, which is my first price target. I haven't shorted it personally or shared it with you guys yet. But again, because I'm wanting to see just a little bit more evidence that the market's breaking down. And then we had a secondary trend line. Actually, that secondary trend line comes all the way off these mid-August lows. That broke down, back tested. I might, depending on what happens, that may become the entry point of this trade if and when we break. It's about 118.10 price support plus the more significant uptrend line that comes off the April 6 lows. And then this would be a pretty lot of thin air. I can add, and again, it's not an official trade yet. I'm just floating it out there for you. This would then probably be T1 right here, about 113.23, T2. And like everything else, like the broad market, a lot of stocks, initially I'm just looking for another pullback to test the 200-day moving averages, i.e. a correction and uptrend. But depending on how the everything looks at that time, the charts of the biotechs, charts of the big leading biotechs, the charts of the S&P 500, the NASDAQ 100, and everything else, then I'll determine whether or not to add additional targets or cover and maybe go reverse there for a long. All right, so just one to watch since I'm on sectors. I already covered financials. I'm not going to go too deep into this. I said I'd get to the market leading stocks. I already gave you a pretty, did that on purpose just to get out. I cover those in videos all the time, but I just wanted you guys to have the charts and the levels that at this point in time I'm watching. If any of those levels change, I'll let you know. NVIDIA is still locked in the trading range. Remember, this was the unarguable heavyweight champion of the AI, the stock market, everything by market cap. This is the everything. And it's peaked out back here. It's been in this trading range since all the way back in July, still in that range. But as I told you before, to me, at this point in time, the most significant technical level would first be that trend line and then a break of the bottom of the range, which would also take out the 200-day moving averages. If you can see them there, there's a red line and a blue line coming in together. It's a confluence of excellent support. That's what I call a lights out level for the market if and when that goes. And I still expect it to based on the posture of the charts on especially the longer term charts. But unless it does, this market's going to do what it's been doing and grind around sideways. That's number one component. Alphabet. This one has strayed very far from her 200-day moving averages, and she's going to have to revisit them sooner or later, as I've talked about many times, including recent videos. You can just put up a percentage of 200-day indicator down on your charts like I've done here. And this is just, and this is bubble-like conditions. It's just not normal. This is typical. This is, a strong bull market. That's how far it gets. And think of it as pulling on, stretching on a rubber band. The further you pull that rubber band, the more it's going to snap back. So basically, it's in an uptrend, zero sell signals, zero reason to be short this individual stock, zero reasons to be aggressively short the stock market because it has the claim to fame of being the second largest component of the NASDAQ 100 and S&P 500. But it's a very well trend line, so well defined. I think a blind man can see it. And so if and when it goes, that should be a pretty powerful sell signal. And again, a lot of hot air just to come and revisit. So even if you're one of those uber bulls, think the market's never going to correct or have a bear market again, or at least not for 2026 or beyond, this would be your pullback point, a re-entry point, an area if you want to buy Alphabet. So like I said, I wouldn't buy it with your money here. I wouldn't short it yet, but when that trend line breaks, absolutely. All right, Apple. Bear flag yesterday was a stick save on it. I've been highlighting this bear flag continuation pattern for the last few days. I have an exclamation mark because I want to see it break down and play out. We did today, no stick save. We had a stick save yesterday. Again, a stick save is when you have a candlestick, a breakdown intraday, and the candle closes back above the support level. There's your bottom of the flag. There's the top of the flag. Again, you have to squint to see it, so I won't read too much into it. However, it did break down. And so if we can see some kind of down move in the futures tonight or tomorrow morning, I don't know who's reporting, who's on the economic calendar. I'll check that later today. I know big tech doesn't report for a little while. We've got a couple weeks before big tech reports, but something to watch there on Apple. And Microsoft. Remember, Apple already had a check mark on Microsoft, like I said recently, after over a month of successfully testing the 200-day moving averages. This blue line is the 200 simple. Started to finally move away from them, and it's continued. That momentum has continued so far after, like I said, you can test them forever, and support is support until unless broken. And then once you take out the, clearly you want to see a stock start walking away in a more impulsive manner to say, yeah, the 200s have been taken out, not a one-day drop or a small marginal move through, even if it's a week-long. When you're in close proximity, give it the benefit of the doubt, especially on a bull trend. So as I told you, check mark already given on that one. Amazon needs to take out that uptrend line right there. Again, these were all covered earlier. Broadcom, again, there's not much of a change since this morning when I got those charts out to you. So I'm going through them pretty fast. Potential bear flag also on Tesla. And that's nice because that bear flag comes in with that uptrend line. So the way when I highlight double or triple support or resistance levels, I like those much better than obviously a single support. Why? Because some people are trend line drawers like me. Some people are big on horizontal support and resistance like me. Some people are big on moving averages. Some look for particular chart patterns, be they bullish or bearish. I'll use it all. I'll put fibs on there. The more the merrier. And so the thing is, the guy or gal watching that bear flag might not be looking at that trend line, but the guy or gal looking at that trend line, they want to wait for a break of that to short. So they're all seeing this, it's all the same thing. It's a break of support. One is a bearish chart pattern, continuation pattern. The other is an uptrend line. So all the better if we get a big solid move down there, especially a big red daily close. All right, that's about it. That's not one of the Mag 8, so I'll stop there. And I'll go to just some individual stocks. That NFE I gave you before broke out yesterday, printed a solid close above there. Actually broke out, well, again, I told you recently I wanted to see it take out 130. When we were above, we had broken out the other day. We triggered, the buy signal was official on Tuesday, so it's an active long trade because we closed above the trend line. Yesterday we closed a little higher, and today we took out that 130 level, which was a spike high from that first candle right there, which didn't break out. That was back to close back on there. So you had 1, 2, 3, 4, 5 days testing. That one was maybe day 6 because we parked on the trend line. Then the breakout candle moved up today a little bit. It's about an 8.5% gain so far. You have the targets, and again, like any trade, it either pans out or not. So now we have an entry point. Now you can set an objective stop based on your price target or targets. I say that because some people like to take the quick buck, get out. Some like to hold out for the prize. Some people like to take partial profits when initial targets hit. And so each of those traders are going to have different stops, and different traders have different stop parameters. Typically, I like about a 3-to-1 RR, sometimes a 2-to-1, sometimes a 5-to-1. All depends on the trade. But at this point in time, you can see there's some nice support here. You really don't want to see it go much below $1. A stock loses $1. People get worried because if they're under $1 for too long, they can face a delisting, and they will face a delisting. And so if it does, it's going to be a marginal new low. And my guess is they'll probably, somebody posted there might be some fundamental issues with this company. It's just like anything. Don't fall in love with it. And by the way, it's a cheap stock. Don't put a lot into a sub $5 stock, right? It's just, you can wake up to a big gap down, beta adjust your position size, nor do you need to, because if my 5th target's hit, you're going to make 144%. So you don't have to put the same amount you'd put into QQQ or SPY or Procter & Gamble, right? All right, so that's that. Speaking of that, I'm going to loop back to the sectors. Just last week, I told you, thanks for Jay McCallum posting a bunch of stocks on consumer staples, said I really like that. sector, and gave you a bunch of trade setups there. Like I said, my enthusiasm is cooled a little bit right now on new long positions based on my outlook and expectation for the market. Here's Staples. Basically, it's been a huge run up. Now, what I wanted to bring this up, and I brought it up to you the other day too. This is sector rotation. Okay, smart money professionals, hedge fund managers, mutual fund managers, pension plan managers. They are the ones doing this sector rotation thing more than mom and pops. Mom and pops tend to chase hot stuff and chase whatever's going up. They're in silver, they're buying silver right now. They're buying, the hot stock day jour. But this is sector rotation, but it's powerful. I want to just point something out here. So if you remember, we had you can see it right here on the chart, an almost not as vertical, but a nearly, look at this, from the beginning of January right up to that's about the late February, early March highs. Big ramp up into Staples. They're defensive issues. These are, again, staples, things you need, not things you want. Consumer discretionary are the items you want. That's the big 85-inch, 100-inch flat screen TV. Staples are toilet paper and toothpaste, boring shit, right? So this is where in a recession or a bear market, they hold up better. They'll go down, but they just go down less. And when the pros think the market's ripe for a correction, they'll move in. So again, you can see it right there at the beginning of the year. And I'm going to flip over here now to the tech-heavy NASDAQ 100, which we traded with impunity. We were short there. Predicted any new high would be a marginal new and still divergent high that'll fail. So, and then once we entered the trading range, it was a short entry highlighted there. There were multiple short entries, just like that last NVIDIA trade I had to spell out for somebody recently on the site. Multiple entries. Whether any of those or that NVIDIA trade, I think at least one was stopped out on the early one. Targets were hit, and we kept re-entering. And this had multiple entry points down here. Then we lost the trading range, just like now. This is a similar trading range, except we haven't made a marginal new high yet. And we may or may not. Then we took it out, bear flagged, back tested the 200s after taking them out. And then I gave you a bottom would fall out of the market number right about here, the day that before Trump stepped up the podium. That was it. And then reversed all that. Said time to cover all shorts, go full long right there. And now it's been a hell of a run, and we are coming up to an identical technical posture situation. Negative divergences. If I drag this line, any new high will still be a divergent high, as long as it's marginal, meaning as long as we don't go up 20% and have some kind of crazy blow off top. If we do, so be it. And that's what stops are for, my friends. You pick it. However, again, it's not an all-in moment yet. It's a grind around market. Tons of more money to be made trading individual stocks right now. I'm going to get to a few of those real quick. Just wanted to point out that's what's going on there. Oh, and back to what I was just showing you. Okay, I was just showing you the consumer staples, which have exploded recently. Remember, and I highlighted the explosive move from the beginning of January, right here. There's January 2025. Into the end of February. So this is where, just like right now, that they stopped buying tech. Tech wasn't going down, but it wasn't going up, just like right now. And all of a sudden, there was just a huge rotation, kind of a stealth rotation into the consumer staples right there, staples XLP. All right, just like that one. So I just wanted to point that out and tell you what it most likely speaks to. Again, there's been a lot of rotation going on in the market, including this sector. And that's it. I think we probably hit, let me see, that MDLZ probably hit T2 today. Yep, it did. Perfect tag. Look at that right there, T2. So T2 was it. That was the one of the three that Jay McCallum asked me a week or two ago that I liked as actionable trade now. The rest were rather see them come down, get a little closer to those support levels. And so that's a quick pop right there for those that took it. And we'll probably get a reaction here because it's pretty good resistance. You can see quite a bit of reactions there. And, if we do pull back and the market holds up, you can maybe look for objective re-entry on a pullback to T1 or the trend line. And then that's still the third and final target, which would simply be a test of the 200s This stock is clearly in a bear market, a bear trend. Make no mistake about it. These are lower highs and these are lower lows. That is by definition a downtrend. And in a downtrend, I love bear market rallies, just like I love shorting corrections in bull markets. They're very profitable, very quick and fast. Get in, get out, hit, run, move on to the next one, right? That's the 200s right there. So if we get up to the 200s, that would be a nice exit point, unless things are changing in the market. Maybe this stock recovers the 200s and moves on. There's quite a bit. I mentioned Procter & Gamble earlier, just as a kind of a blue chip stock. But there's the positive divergence a lot, and that one hasn't moved too. It started to move up. There's a downtrend line there, and 200s if it's taken out. What else do I have for you? I already covered NFE, XBI. Let's see. Let's just make this video quick with a quick update on the ag input stocks. These I told you last year. Even in 2024, I started highlighting these and I laid out targets and told you these are like long-term trades for me. And still, a lot of them already hit targets and put us in divergent highs, gave us corrections. This is a leader. There's not many in the sector. I'm just going to go through all of them. This is my, you can see the watch list populates there. As I've warned you in the past, the ones down below are a very small market cap. You get down here, you're under 100 million. You're at 100 million when you get to these guys, AVD and LVRO. Then you go below 100 million. So they're just you got to be careful. You don't put a lot in those little guys. You don't need to put a lot. If they run big. If they drop hard. CTVA, and I'm still in a bull market. This is been a good place to have money. It's not it's not AI, it's not crazy money, but it's been moving up. And the ones that I gave you price targets on, NTR is coming very close. Still have an alert set for T5. Again, we started buying these back here, I think in 2024, all and around this divergent low with breakouts there. We had my first target hit, second target hit, third, fourth target, got about halfway, 3/4 up the way to T5. And put in some divergence. Nothing goes up forever, right? Even in a bull market, you're going to correct. And the correction has run its course, came back to the 200-day moving averages. You turn off all the lines. You can see this is where we lost the 200s. You were in a bear market. Rallies to the 200s got sold. Then right about here, something changed. You recovered them. Brief little whipsaw dip, but back above them, and that's it. So this correction that we just had appears to have run its course, came back to the 200s. Also, not by mere coincidence, that was T2, one of my former price targets. Pullback 2 was hit. And now we're about to hit. That's the fifth and final trade. They may keep running, guys, and if you're in them, set a stop, let it run if you want. Unless I add, the way I've always run this site, unless I add a new target before one is hit, I'll consider the trade officially closed. I put it in the archives. But again, anybody in these or interested in getting in now or whatever reason, let me know and I'll continue to provide updates anytime you want. We get up there soon. Yeah, you might have some big divergence, but they're also coming off a much bigger divergent low. It looks to me like this was the end of a larger bear market with a new bull market underway in these guys. So there may be more upside. The other ones I gave you were CF with price targets. CF divergent low there. We hit my first target, went a little higher, put in a divergent high, corrected back down to that previous low. It's been, this one's just been a sloppy, and again, these pay dividends. I highlighted that at the time. The stocks that I'm more tolerant holding for a long time are those that pay dividends, so you're getting paid to wait. Especially in IRA. These are like things I buy in IRA accounts and longer term swing trend trades. T2 right up there, final target. So you just got to punch through all this noise here, this trading range. And we are coming off a nice divergent low, bullish falling wedge pattern. There's your wedge, positive, aka bullish divergence, just like we had a divergent low there, just like we had a divergent low there. That's when we first went long off that, somewhere off that divergent low to my first target. All right, so T2 remains as given before, 110.42. MOS, again, divergent low. We hit my first, second, third target. We did it and put in a divergent high. That sent us down on the correction. We remained above that previous low. It's a hell of a correction, but that's all it is so far, it looks like. And if the sector goes up, the rest of them, it's a birds of feather flock together type of thing. So that's still the same fourth target I gave you way back in 2024. It looks like October. And a potential fifth target, which I could still easily see. Again, we need to power through there. Okay, I did that thing where I paused the video and I'm sitting here talking about these ag input stocks. Honestly, I was at 24 minutes. I have no idea if what I do is I uncheck pause when I collect my thoughts, move on to the next set of charts. I'm going to start over with the ag input stocks. If I missed anything, I'll cover it in this video. I so far should have covered energy. Well, the broad markets, I know I covered all that stuff. Financials, biotechs, consumer staples. Hopefully you got that. And a couple individual stocks. And now I'm going to go over the ag input stocks. This is a sector that I was been repeatedly covering since 2024, and we put in these divergent lows back here. These are your fertilizer stocks and the likes, and this is CTVA, the biggest in the sector. I'm going to go through them all. Again, if part of this is a repeat, my apologies, but what I said here. These are all the holdings here, and I have them, as I always do, my watch list sorted by market cap. Just keep this in mind. When I get down here to AVD, you've stepped down to now a $109 million company, $103 million, and 76. They go down very fast. Those are tiny little micro cap. Those are high risk. You can make a lot of money. You can lose a lot of money. So you don't put nearly as much in these little guys. You don't need to. The other thing that I was saying, again, I don't think the recording caught it, is, as I've stated many times in the past, I like to take a shotgun approach to this sector. To the best of my knowledge, there's not an ETF that tracks this sector particularly, the ag input stocks, fertilizers and such. Therefore, what I do personally, and what I always say on the site, I like to do a shotgun approach, meaning I'll pick the top half dozen or so best looking charts. Those are typical ones I give you price targets on, and spread my bets. And then I'll beta adjust. The bigger the capitalization, usually the more money I'll put in. And those small guys, you don't need a lot. These guys run up. Often I get triple digit trade profits on when I engage this sector on the long side. So there's CTVA. Again, clearly in a bull market, bull run, you can see it's like, this is since it's been moving up here. These aren't high flyers. They can be at times, not the bigger ones. But it's not AI. It's not exciting. But they also pay dividends. I've mentioned that. And these are the kind of companies I like to put in my IRAs, and just hold as longer term trades and investments. Because even if they grind around for months or a year or so, you're getting paid at least collecting a dividend as long as your stop's not hit on those. So again, this one, if it takes out this high, it's just going to be a continuation of this bull market. Uptrend, by definition, is a stock making a series of higher highs and higher lows. And that's what this one's been doing. And that's the kind of leader in the sector. NTR was one of my top picks back in late 2024. There were probably multiple entries. I think first on that bullish falling wedge break, we made a marginal still divergent low. We hit my first, second, third, fourth targets, then put in a divergent high. That was a story on almost all of these guys. So we fell shy, a little shy, went to about 3/4 of the way up to my fifth target between T4, and then put in that negative divergence and sent us back and to correct back to the 200-day moving averages and my T2 level. So that was a very objective re-entry point. You can see here, like many stocks in a bull market, you're above the 200s. Once you clearly take them out, back test, rejection, 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 little false whips above the 200s, another rejection. Then this is where they regain the 200s. One little more whipsaw. It's a nature. You got to look at every stock and say, what does it do historically? And some stocks have a little pattern of blowing out. They call them suck out moves. They suck in longs. They shake out weak-handed shorts, and then continue the trend. And likewise, when the market starts, or when it reverses. So this is the reversal. There was all the evidence in the world. That's why I have multiple videos. And when you see them in the trade idea category, some that I'm going to go over now have already hit the final target. They're still going to show as active trades, only because I cover them all in one video. And then when I categorize that, all those symbol tags are in there. And if I click that or set that to be an active trade category, it's going to show every symbol covered. So they're not all, and some of them didn't have targets. Just keep that in mind. If you have any questions on the active trade ideas, just reach out to me. Put a post in the comment section. I'll get back to you. All right, so that's it. We hit 1, 2, 3, 4, divergent high, corrected back to the 200s, T2, and it's gone up. If things go well, tomorrow we'll hit T5, and that one will be a completed trade. There is momentum in the sector. I made the case, which I still maintain, a likely bottom in the sector. So although I haven't made it official, I can tell you that would be the next target, and I think there's a decent chance that'll be hit, 76.33, if you're looking for a T6 on this one. CF. This one I only gave you 2 targets back then. You can see as T2 was created, I move it and it's going to update it back in November of 2024 right here. And well, I first gave you T1 and that was right here. We hit T1, put in a divergent high right there, corrected back. So this one's had really nice support at 69.50, another divergent low, higher high. So like some of these have just been moving around for a few years in this range. And so when we pop it, the next pop will probably take us up to T2 unless the market craters. But this sector I like, and I addressed it at the time, very little, if any, overlap in the big indexes. And that's what those are the type of stocks that I'm more comfortable with going long, especially if the odds for a correction are high, because in a correction, everything gets sold and taken down, kicking and screaming if it's a component of the big indexes, because of the inflows and outflows to those funds. They've got to sell what they have proportionally. So a lot of these little guys fly under the radar and they can do their own thing, whether the stock market's going up or down. So that's it. Just need to pop that level. And we did just come out of this bullish falling wedge pattern right here. So you had a downtrend line, divergence line, aka positive or bullish divergence, breakout, and it's been ripping up. And so if it continues, hits T2, and that'll be the final target hit. Mosaic, another one of my favorites back here. We put in that divergent low. We hit my first, second, third target at T3. We made a marginal new high, slightly above it, but a nice big divergent high, and that just sent it back down. But it made a higher low so far, and it's moving off that higher low, keeping the potential for a new uptrend intact. And that's still my next target, final official target, T4 zone, and that's still a potential 5th and final target way up there. ICL already hit all 4 targets. That's technically a completed trade. We went long somewhere in here. Shortly after that divergent low, we hit my first, second, third, fourth target right there. Then put in a big divergent high like most all these stocks. And that sent us down for this correction right back to my T2 level from here. Second target was 495. Pulled back to it. And so if we can take out the 200s, that would be positive for that stock. But again, it's not an active trade anymore. Some of the other ones look better in my opinion. SMG, Scott's Miracle-Gro, just big support down here. There was a divergent low, divergent high, sent us down, divergent low, another divergent low here recently. And so longer term, if it can pop this basing pattern, that's what this looks like to me. The stock peaked way back here with that divergent high, sent us down, and it's just been in a trading range for months. You get paid to wait. If this is correct to show me it's paying a 4.25% dividend yield. I don't have targets because it wasn't one of my favorites back then, but a near-term target. But any of these levels are all resistance levels, potential targets. But then longer term, should things hold up, especially this sector this year, and if it can break through there, then that has a lot of upside potential. FMC, this one shit the bed. It had a trading range here, and I'd given you 3 targets. Stop would have been commensurate with whichever target you were targeting. We had a divergent low there, and then it boom dropped down. Once it broke below the trading range, that was it. Just like kind of what I'm looking for in the equity markets now, and it's just been under the 200s. Somebody asked about it the other day. I think it needs to clear this 15 level with conviction. Then it's got just a massive thin zone. The gap technically is there, but that was a quick one-day swoon down. So when you look at my volume at price histogram, the lines are turned down now, but I don't know if you can see it. It's a big thin zone up to that level. So if the sector runs, remember, birds of a feather flock together, then these guys should start to go. This one should start to go with them and probably come visit. At least at minimum target would be the test the bottom of that gap right there. Again, that's the gap. and that would give you from 15 up there, be about a 45% gain. UAN, what can I tell you on UAN? Here's one that, again, see, bull market right here, bull market, divergent high, correction, continuation, divergences, just like the stock market, got bigger and bigger. This is all the same divergences right here. Finally, they played out for a lasting trend reversal, i.e. a bear market, lasted several years, at least that's 2 years right there. Ended here with a, you got it, divergent low, and that set up support. The stock has been pounding on that level. This is a basing pattern. That's what I like to look for. Just like the stock market looks like it's in a topping pattern. It's trading range. And then finally took out the trading range there, and it's been moving up. This further supports the evidence of a new bull market, especially after a bear market when you have these trading ranges and you finally break out. That's that. It's a lot of thin air above. It's in a bull run. I don't see anything stopping it now. I wouldn't chase it here, but I wouldn't short it with your money. IPI, again, these are all, remember, birds of a feather, guys. They all peaked back here with divergent technicals set at divergent highs. They ended here. Bear market ended. This one had a double bottom low, divergent low. Would have started highlighting it in 2024. We hit my first, second, third, fourth target zone, almost a perfect hit. Call right up to the top of that fourth target zone. And then it's not drawn here, but it was a divergent high. As we bounce along the top of the divergence, we're making equal or slightly higher highs. Again, like all of them, almost all of them have identical, very similar technicals. And then they corrected, and that's it. So their case has been made. This was a multi-year basing pattern. We broke out of it here, and we come back in. We tested about the midpoint of it right here on this pullback, but we recently put in a divergent low. And you can see they're starting to buy ththese suckers again. That's why I'm highlighting them. And there's still one long-term trade. There's T5 and 6 that I gave you back in 2024, and left those on as active trades that whole time. And so once we pop the top of T4 zone, which is 3870, it should be open the door to T5 and T6, and that would be total. Again, there were multiple entry points, so I can't tell you what the total gain will be, but about 218 if you wrote it out, plus the dividends, whatever it's paid over that time. AVD, American Vanguard Group. This one kept teasing us with these divergent lows, like wheat and natural gas, but having these pops, tradable pops along the way. In fact, we hit T1 right here, and this one now you have a nice downtrend line right there, see? And guess what? As an added bonus, that trend line comes in with those magical 200-day moving averages. It lost them here after successfully test them there, lost them, tried to back test, rejected, and recovered them here back below, so it needs to get back above them, and it should run. And I like that because that downtrend line right here, I'll thicken it up for you. That downtrend line comes off the highs from back in early 2023. And you have a minor downtrend line here that's just about to be taken out, or maybe just has, just about. And so that's it. So we're coming off. That was a low, marginal new, and still divergent low, and a higher low right now. So pop the 200s, pop that trend line, and I still maintain these next targets here. T1, remember, got sent down after that. That was a little divergent high there. So if T4 is hit from where we're at today, that's going to be a total of 125%. LVRO pushing against the downtrend line. This thing had a little washout move there, but downtrend line resistance, then the 200s, and you can see potential levels here. Max target right now, 480, which would be if hit. It's a low price. Remember, I'm getting down into those low price stocks now, so that'd be about a 300% profit if hit that 480 level. Biox, big bullish, bearish. This is a low price sucker, bullish falling wedge pattern right there. Let's just stretch it out like this. So replicate that, come off the that point right here I have on early July, about July 2nd, 25. Draw that downtrend line, divergence line, pop. First target's going to be 205. If it breaks out, I'm putting a higher entry point. That'll be a 48% profit. Next target's going to be the intersecting downtrend line I'm at now, plus the 200 days. That'd be about an 87% gain. And then my third target right here, 352, give you about 154% profit if it breaks out and runs to that level. See, they were getting down a little cheap penny stock, Phil. So I'm not going to spend much time on these. That just, it's again, if the rest of them go up, this one will probably follow. And this is what happened. I told you, I don't, stay away. Don't play down in this part of the sandbox here. $5.8 million. That's just a penny stock. These are crap stocks here. These bottom ones, even if that's a bullish falling wedge. If you have Vegas money, gambling money that you're willing to lose in a casino, you can put that in these, but no more than that. All right, I'm going to wrap it up here. It's late. It's almost 5. I might review the video tomorrow. If I missed anything, I'll follow up with a post or under the comment section on this video. If I wasn't recording any of the trade ideas I tried to go over today. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.